Hello and welcome, and let's talk about the Jan Nivesh initiative that's hit a record mark where you have had now 1 million pledges that have been taken, and we are still counting. Jan Nivesh, by this entire 1 million number, becomes a path-breaking initiative. It becomes a world record by itself, and Jan Nivesh, has hit over 10 lakh pledges for this entire event. This is another milestone for ET Now. Jan Nivesh, invest for future is probably what we are trying to say. Use mutual funds to bolster your financial products. That's essentially what one is trying to say, one is trying to do. So in this special programming, we have a whole host of guests, and largely we are going to talk to them, take their views on Jan Nivesh and what essentially do they believe is the way going ahead. So that's probably what we're trying to do, and trying to reach out as to what's happening in terms of Jan Nivesh. Now let's go across first to my colleague Ajay. He's with us now. The rise of Niveshak 2018 has been one of the biggest victories of this year that is going to go by, where retail investors have continued to participate into this boom with great attendance. Ajay Sharma tells us the trend in SIP flows for the year. Take it away, Ajay.
Well, clearly, success of the Jan Nivesh program, the world's largest investor outreach program, clearly in a way tells about how the retail investors come of age. In fact, we did see that not only is the penetration of financialization and financial assets and preference towards SIPs, etc., is increasing in the country, but the size and magnitude is only going higher. About $1 billion plus monthly SIP flows this year, YTD, also indicate that the retail investor doesn't get perturbed by falls in the market. They, in fact, help neutralize a lot of FII flow this year. In fact, there is a clear preference towards the investor community towards financial assets because of low or absolutely no return in some cases from bullion, from gold, precious metals, and even real estate or property across the country is very subdued. So there is a general tendency which is being observed, a major shift which is happening, which also was a big factor for the Jan Nivesh ET Now AMFI Jan Nivesh program becoming a mega success. So 1 million number, and the count is on, and who knows that in coming years we would actually see from 4.5% of the population choosing to invest in financial assets, equities in particular. The number could go up to 30-40% in the next decade or two, just like any other large developed markets are witnessing, like US, France, and even UK has got almost 25-30% preference towards SIPs and equities in general. So we are witnessing a tectonic shift among the retail investor community.
Right, this is, thanks Ajay for joining us. With that, I'm going to very soon go across to Jayesh for the math behind Jan Nivesh. It's a very proud moment for ET Now. Not only do we bring you up to speed with what's happening in the markets, we're also trying to be a responsible stakeholder in the markets, all with the idea of helping you get richer and secure your future. Before I go to Jayesh, Pankaj, let me ask you a question. Did you take the Jan Nivesh pledge?
Yes, I did, and I did it on the very second day when we launched it.
I did it on day one, so I did beat you. I just wanted to say that on air, that I did it on day one. Anyway, now going to Jayesh. A large part of the domestic inflows from mutual funds have come in via the SIP route. This validates the premise of a movement like Jan Nivesh that has encouraged investors to invest regularly. I'm going to ask our producer to keep showing you the phone number that all of you have to give a missed call to pledge your 1 day's income to secure your future. That number coming up for you on your screen as well. But Jayesh, bring us up to speed with the math.
Well, clearly the success of the Jan Nivesh initiative was in fact also reflective in the AMFI's numbers that came out earlier this month. So if you have a look at the data that was released earlier this month, for the month of October, the net inflow in fact stood at about 35,000 odd crores. Now this is significant given the fact that the previous month we had seen an overall outflow of about 2.3 lakh crores, and that was the most in about 10 odd years that we had seen such a big outflow number. Now if you look at equity, that as an asset class did extremely well, because equity inflows, which is inclusive of the ELSS, that came in at about 12,600 odd crores, and it in fact climbed on a month-on-month basis from about 11,100 odd crores, and it was the highest inflow number that we saw for the equity asset class since the month of Feb earlier this year. Also for the asset under management, now that in fact came in at about 22.5 lakh crores. That's a marginal jump on a month-on-month basis, but nothing significant over there. But if you have a look at the equity asset class, the assets under management, that has been steady at about the 7.5 to 8 lakh crores. So that's the larger trend that we are seeing for the industry itself, given this year. But what is surprising was the SIP number, which shows the confidence of the retail investor that has been displayed, and the maturity of the retail investor as well. So if you have a look at the SIP number, that has come in at nearly 8,000 crores, which is once again a record high. So thumbs up for the retail investor and the Jan Nivesh initiative as well.
Thanks so much for that, Jayesh. We have a very special panel now joining us to discuss about the success of Jan Nivesh, what's the way ahead, and what are the benefits of regular investment. Let's first go across to NS Venkatesh, Chief Executive at AMFI. Mr. Venkatesh, Jan Nivesh has hit 1 million pledges. Your thoughts and importance on regular investments?
It's indeed a wonderful day for us, in the sense that over 1 million people have pledged to invest 1 day of their salary per month into the mutual fund sort of thing, which is new investors coming in. So to that much extent, the investor education efforts that AMFI along with the Times Network has put in through the Jan Nivesh program is showing a good amount of traction. And I should thank Times Network for assisting AMFI in launching this Jan Nivesh program, and I'm quite confident that this program will succeed, and we should see more and more new investors taking the pledge. Having said that, I would say that the new investors, the number of folios, the new investor folios are really growing at somewhere around 19-20% per month over the last 6 months. So that is a healthy sign that we are seeing, and the markets may be volatile, and that is the very nature of a market. And I would always say that the investors should be very, very disciplined, and they should continue to invest in a disciplined manner. Towards that, the systematic investment plan, or SIP as we call it, is very, very well received by the investors, and we are seeing upward traction in SIPs numbers. Over the last 6 months, the SIP numbers are showing an upward trend only. Despite the market being volatile, we are seeing an upward trend in SIPs. So that's a good sign. That actually indicates that the investors are getting matured and more disciplined when they are investing into the equity markets through the mutual fund vehicle.
Okay, time now to invite A. Bala on the show. He's, of course, the CEO of Aditya Birla Sun Life AMC. You see him very often on ET now. He's also been one of the those who have helped Jan Nivesh reach the kind of success it has. Always a pleasure chatting with you, A. Bala. You've been a part of this initiative. It's a momentous occasion for all of us that are trying to improve the penetration of the markets, the mutual fund industry, to make and secure the life of all of ET now viewers. What has your experience been like?
Yeah, I think it's a great pride moment for the entire MF industry. I still remember the discussion that we had with the Times Network and Nikunj and the team, and along with the AMFI Literacy Committee members, and brainstormed as to how do we actually take the industry to the next level. And then we came with a beautiful idea, as the name of Jan Nivesh, and every citizen of the country has to take a pledge to be invested. And while the initial numbers were kicking in, 50,000 lakh and 2 lakh, when I see the number of million pledge, that's definitely it's a big achievement, a big moment, and something which all of us should take pride. And being part of the MF industry for long, I'm honored to take this of the entire industry as well.
Right. Bala, do you think it is just the first milestone? The idea is to bring more and more awareness about investing into SIPs?
That the trend has been going actually for the last quite some time. I think first time ever I'm saying, maybe not first time, second time I'm saying after 2009 crisis, the investors' understanding of investing in mutual funds have been growing rapidly. And there has been an increased realization among the investing public that the best way to invest in mutual fund is with an SIP. And sometimes when we ask people about investing in mutual funds, sometimes they even say that ignoringly, with a lot of ignorance, that they are investing in SIP and not in mutual funds. That's the way I think it's gained the momentum. I think the Jan Nivesh program jointly with the Times Network and the SIP promotion that all of us do as an industry body, I think would definitely help the industry to not only grow the size, also to have a large pool of customer base across industry, with every citizen of the country having a folio in mutual funds account.
Hey Bala, hang in there. I'm just going to go across to one of my other guests, NS Venkatesh. What I want to get a sense from you is on how one should be navigating their way through this volatility. Look at the kind of volatility you've seen in the markets. That's not going to go anywhere for the next 6 to 8 months. Volatile times ahead, whether it's global in nature, the general elections 2019, the crude market. What I want to ask you is that is it now more than ever relevant to perhaps be safer, approach SIPs, be more disciplined? Is that the right way to approach the markets and of course make our wallets fatter and thicker?
I definitely agree with you in the sense that there are very many volatile factors which are on the horizon. So that could actually take the market up or market down. Both ways it is possible. Having said that, I would definitely say that the mutual fund investors should continue to use SIP as an investment vehicle and continue to stay invested. Because what happens is, despite the market moving up and down, if you stay invested over a longer period of time for the goals that the investor has set, then they tend to accumulate wealth over that longer period of time and meet their goals. So I would always say that it is better for them to invest through SIPs, the systematic investment plan, and remain invested despite the market moving up and down, because that is the very nature of the market. So I think the investors are behaving well. The credit for that should also be given to the registered investment advisors and the mutual fund distributors who are reaching out to these investors and having a holding and a helping hand where they are able to communicate this mantra of stay invested for a longer period so that they reap the benefits of investment over a longer time period.
It's only about 1 million now. Do you think more such effort needs to be taken to further encourage Niveshak?
I would say so. I would acknowledge the support of Times Now for coming up with this Jan Nivesh program, and this is only the beginning of that program. We are quite clear that this program will keep on unfolding over the next 6 to 12 months, so that more such investor initiatives will be there, where the investor awareness will be the key point for AMFI to deliberate upon and deliver. And we are quite sure that more such programs will unfold. And with that, we are confident that the investing public will take mutual funds as the investment vehicle for them to test the equity markets, and then once having tested, they will continue to remain with the mutual fund as an investment vehicle, using SIP as the investment process. The macroeconomic fundamentals of the country looks to be very decent and looks to be promising. So that in turn will bring a lot of wealth for the investors who remain invested over the longer term. So I would submit to the investors that they should use this as an opportunity and start investing early and take advantage of their early investments through the SIP route.
Okay, gentlemen, hang in there. It's time for a short commercial break. You're watching this special in ET Now, a Jan Nivesh special. Remember, it's the Times Network initiative. We'll be back in less than 2 minutes, and we've got many more experts lined up for you. Welcome back. You're watching this special program on the Times Network initiative, Jan Nivesh, which has received 10 lakh pledges. So it's a resounding success. That much is given. Now let's get you two big market voices. Nimesh Shah of ICICI Pru and Sandeep Sikka of Reliance Nippon Life with their experience on as far as Jan Nivesh goes and their advice to investors, to all of you that is.
So I'm very happy with the way mutual fund industry has been structured overall. In the way it has been regulated, it's a very pure product for the final investor. Now, what was the challenge? The challenge in front of us is that India is growing at 7 to 8%. If you see the nominal growth, it is more than 10 to 12%. Now, how does the common man of India participate in the growth of the country and beats inflation in the country? That was a question mark. So since this product is regulated so well by the regulator, I believe over a period of time it will make wealth for the investor. So I'm very happy that the common man has started coming into mutual funds. By this, what will happen? He'll be able to participate in the growth of the country. So that's a...
You're right. I think if you look at the mutual fund, the industry has been growing. And if you look at the theme of the conference also today has been distribution. It's not only about mutual funds, but it's across all products, insurance, banking, life insurance, general insurance. I think one thing clearly comes out, across all industries, if you were to see the penetration of financial products in India is very low. And if you have to reach out to these investors, I think distribution is going to hold the key. So I think there is no debate. I think it's a foregone conclusion. I think the any industry cannot grow till the time we have a well-oiled distribution machinery. So today also in the conference, I think what came out clearly is distribution is going to be must. How do we ensure, the entire distribution is done in a manner which takes care of the interest of the customer also, as well as helps in the growth of the industry.
Right, let's welcome in Shamli Basu of HDFC AMC. Shamli, the SIP flows as well have remained particularly strong despite volatility that you're seeing in the market. Is this an indication that investors have become matured?
True. Now the industry is around 8,000 crores per month as SIPs, which is a very big achievement. And if we can keep this momentum on, it certainly is an indication of maturity of markets and financial inclusion. I think it gives a lot of reason for all of us to push this concept of SIPs, which is small savings, encourage small savings, so that everyone can participate in this big movement that we have.
What about the contribution of advisors on helping investors with their asset allocation decisions, Shamli? How important a role is that? And let's be honest, what is your experience been? Do investors choose the fund house or do they choose the fund manager?
I think advisors are very, very crucial because, you need the way you need like a family doctor or a lawyer or a chartered accountant, you need a wealth creator for you in the form of an advisor. It makes sense for an advisor to teach a client what an asset allocation is. And if it is sold properly, then the client does not get unnerved when the markets dip or tank. So it's very important that our investors who are walking in this industry for the first time are sold correctly so that they don't have an unpleasant experience in mutual funds. And a role of an advisor is extremely crucial because our financial literacy levels are still not the best. And it's a concept that we are trying to sell. It'll take a long time, but if you're on the right path, I think our advisors will contribute immensely to this well-being and wealth creation for the economy.
Okay, now let's invite Dhirendra Kumar, the CEO of Value Research. Hi Dhirendra, I know you have very strong views on this one. So active and passive funds. Which ones do you prefer? But more importantly, what's your advice to all of those that are joining Jan Nivesh, that are watching you right now? What should be the preferred investment instrument for investing?
Index funds are making small inroad. The index funds are making, becoming popular. They look like becoming popular. They are actually not popular. Simply because, employee provident fund organizations started investing in the index fund. So that has turned out to be one of the largest equity fund, which is an index fund very quickly. Today it is close to, 40,000 crore built in the, shortest period of time, and it will keep getting bigger. So index funds are, and it's a very low cost. And so I would say that index funds are becoming popular against the large cap funds. One should, the large cap mutual funds, they have lost the game. I don't think they stand a chance, and it is entirely their creation because they are expensive. The 2% expense charged on and the compounding effect of that, as compared to if you invest in the index fund, and if you invest in a good large cap fund which is able to once in a while beat the index by 2-3% margin, they will be equal. So you will be assured of doing just as good as the index. You're guaranteed to do that, and that you are not guaranteed to do with an actively managed large cap fund. But apart from that, I think the case for mutual funds and the actively managed mutual funds for most individual investors still remains very strong.
Right, we're completely running out of time. So at this juncture, I'd like to thank all of you for joining us as we celebrate the success of Jan Nivesh. 10 lakh pledges in. Here's hoping for another 10 lakh pledges in half the time. Many thanks for watching.